Welcome to Momentum Monday. Today is April 14, 2024. Let's take a quick look at what happened in the markets last week. George Soros says that volatility tend to rise at turning points, and we're definitely seeing an increase in volatility lately. As you can see it in the price action in UVXI, VXX, and so forth. They've been spiking in the past 2 to 3 weeks, really. Here's a chart of the S&P 500. You can see year to date, it tested its rising 20-day moving average. That's the green line here. Roughly about, multiple times really, since the beginning of the year. And every single time it would bounce and it would make new all-time highs, which is a sign of a really strong trend. And at the moment, it really broke below it and really close below it. Now you can see that the bounces, during the bounces that 20-day moving average is turning into resistance. So last week, the S&P 500 tested its 50-day major level. Typically, the first test lead to a bounce, but not every single time. And my thinking here is that if it loses that level, last week close here around 509, 508, it is very likely to test its year-to-date volume-weighted average price, which is right around 500, and also coincides with the previous, with the level of technical support. So what were the big news last week? Obviously, CPI came out above the estimates. And now we have 3 months in a row, January, February, March, the consumer price inflation is coming above estimates. And the first time it came above estimates, everyone ignored it because it could have been just a blip, right? And the second time it came above the estimates, also the market didn't really react for more than 1 day. And even the Fed didn't really acknowledge that, and they said, "Oh, this could be just a temporary bounce in inflation." But now we have a 3rd month in a row where consumer inflation is coming above estimates, and when you have a data being confirmed 3 times in a row, like for me, that's a trend. And obviously, we saw that pullback last week, especially in small caps, after that CPI came above estimates. We saw a big sell-off in the pre-market, a gap down, and then it closed below its 50-day moving average. And now it's hovering near its that 200, 198 area, which is a really major area of potential support and resistance. You can see here, it acted as resistance multiple times in the past few years. And now the big question is it going to act as support? So CPI came above the estimates. Obviously, interest rates went up. And every time interest rates go up, this typically is a big headwind for small caps, for companies that are not really profitable, for biotechs, for high beta stocks. Because the premise behind the rally since November, when small caps in general and lower quality stocks outperformed, was that the Fed is done raising rates and it's actually going to continually and gradually cut them over the next few years. So the market has been discounting this thesis. So if at any point the market stops believing in that story, in this narrative, then we're going to see it in the price action, exactly in those sectors like biotech, small caps, home builders. They're just going to underperform if the market stops believing in the story that the cycle of rate increases is done. Interestingly, the very next day, PPI, the Producers Price Inflation Index, came below estimates, and which is also kind of an explanation why the the leaders, really, the QQQ, are holding much better than the rest of the market. Most of them are just building new bases, biding time, just going sideways. You can see Microsoft and Meta, Google, Amazon, all of them are really either slightly going up or just going sideways above the rising 20, 50-day moving average, um, which is bullish. Even Apple, which has been one of the biggest underperformers year to date among mega cap stocks, bounced. And as you can see, it was just forming here a big bearish flag. It was just about to break down, and then Apple came out with the news that their new M4 chip is going to be focused on AI, and it is going to be introduced in their new product lineup in 2024. And the stock immediately bounced, but it's in a downtrend. And when a stock in a downtrend bounces, it's very normal to see some back and forth action, some resistance near its previous level of support, like 180, for example. I mean, institutions don't really care about those levels. They're going to buy. They're not going to buy blindly. They're just going to buy the dip. This is why it's just, we saw a quick move to its declining 50-day moving average, where it kind of stalled on Friday. I mean, Friday was also a pretty weak day for most stocks. So I kind of expect here that if it dips slightly, maybe towards the VWAP, since it's breakout level, which is right around 175, probably that dip is going to be bought, and then the stock is likely to test 180 before it encounters another area of selling, be it short sellers stepping up or short-term buyers just taking profits. But yeah, Apple seems back, and which is definitely positive for the big cap indices like the QQQ. Obviously, energy has been really strong lately, as the geopolitical tensions in the Middle East have been rising, and it seems like the market has been expecting that. As you can see it in the price of energy stocks, the price of oil has been gradually climbing in the past 2-3 months. And now the big question is here, look at this weekly chart. If this level here that used to be right around 93.50 for the XOE, the Energy Select Sector ETF, it used to be a resistance like multiple times in a row. So now the big question is, if on a pullback is going to become a support, that would be bullish for further price appreciation in tech. And the situation in gold is similar. We had a big breakout on a monthly basis. As you can see, this level here from 2011 was tested 3-4 times. Then the price action became really, really tight, and then we had a huge price range expansion. And here on the daily, we talked about it multiple times. We had a big breakout, then sideways consolidation, then another leg higher. Now it would, after this big bearish reversal candle on Friday, it would be completely normal to see probably some continuation lower in the short term, and it would be bullish if buyers start stepping up near the rising 20-day moving average, or just the ETF forms a new base right above that previous level of resistance around 204 to 200. That will be a bullish development for gold. The IPO market is still going, even though you can see the IPO ETF tested the 50-day. It's not close. That's what it matters, and we're continually seeing new stocks becoming public, and they're really good short-term trading vehicles in this range-bound choppy tape. And here's one example of last week, MNDR. As you can see, opened and then it went up 3 days in a row, and then typically the easiest way to trade those is just above the previous day high or above the previous day close with a really tight stop for a quick intraday trend move. And speaking of recent IPOs, on Friday, one stock really stood out, Coupang. I mean, they're not really a recent IPO, it's just from 2021. And as you can see, it opened near 50, and it's been some gradual and consistent selling all the way down to 10. And then it went sideways for about a couple years, and now it's trying to break out from this huge base. And on Friday, Coupang, by the way, is like a e-tailer in South Korea. It's considered the Amazon of South Korea. And they announced that they're increasing their annual membership prices, and this is the why the stock really reacted this way. It had this big breakout on a really red day for the majority of stocks. And right now, let me show you a different chart real quick. Here, Coupang, as you can see, Coupang, it's right back to the VWAP since it became public. As you can see, this is VWAP is the volume weighted average price since the company went public. So if it starts trading above that level here, that would be a really bullish development. It would be a sign that, the average buyer is now in profit and the average seller is now losing money. And as you can see, this is Stanley Druckenmiller, one of the best investors of our time. This is his second biggest position. And he's been accumulating the entire time. And now it's probably starting to make money in this position. So this is a really important level to watch to see how it will react near its VWAP. And here's why it is important to show you a couple other examples of stocks, how they acted when they approached that level. For example, Instacart. Here's what happened. They also sold off after their IPO, formed a mini base here, and then they broke out. But as you can see here, the price action when they approached their VWAP since becoming public, and you can see it on a daily here better. It was immediately a resistance when it was first approached. Then it built a new base with a higher low. It got tight, and then when it really broke out for a third time after testing that IPO VWAP for a third time, it really just didn't look back. It just went from 28 to almost 40, which is like what 40% move in a really short period of time. And here's another example of also recent IPO. Cava, the Mediterranean restaurant chain, also kind of broke down after its initial public offering, and then it went above its VWAP here, and as you can see, went above it, tested it, held as support. What was resistance became support, and then it just took off 40 to 68 in a short period of time. So yeah, this is why I think this is a really important development in Coupang. Ideally, it will probably just spend some time here consolidating right below it and just building a higher low and just offering a better risk reward entry points. But one thing that is different about Coupang compared to Cava and Cart is that it has a very large number of shares. So you can see Cava only has about 100 million shares outstanding, and then Cart has a little bit more, about 250 million shares outstanding, and then Coupang has 1.8 billion shares. So it will be a slower mover, much slower mover than the other two, but definitely showed notable relative strength on Friday by just breaking out and closing strong on a day when most stocks were down. So this is something that I think some institutions are going to buy on dips. And what else? I think that's all for this week, guys. See you next week.